Solomon, you're no stranger to this audience. You've wowed them earlier today, I believe, but EURAZEO needs no introduction. And one of the things you're doing is venture capital, and you've been investing at the beginning of companies, and you have the capacity to follow through. What bring to life all this excitement about Europe with an example that your firm has been following and been successful in?
Thank you very much. And I think, again, really a big thanks to JIC for organizing this panel, because Europe has incredible talents, great companies, but it does lack one point: marketing. And I think that the American friends are very good at. The Brits, slightly better than the continental Europe, but we won't go between continental Europe and UK because we're all Europeans. So a panel like this is really key to be able to expose more about the beauty and especially the attraction of the European markets. And I think, Chris, you mentioned that very well. The US started 60 years ago, Europe 30 years ago. So we're still in the trial and error, we're still learning a lot about it. Maybe to give you one example of what we've done, and we've started, like Amadeus, roughly 20 years ago. Incredible company we backed was called Criteo, a French-based company founded by Jean-Baptiste Rudel. Criteo, what they do is quite simple. They created the cookies on the internet. So when the internet was becoming mass used by everyone, they found that it was a great idea to be able to track a bit what everyone was doing and looking on the internet. Don't blame me. But this was a way for them to be able to optimize and at the end of the day to target better advertisement, which has been one of the key motors of revenue growth for a lot of these companies. And when you think about Facebook, this is definitely what they've built their business on. And so Criteo, we in fact invested quite earlier on, even earlier than what we are currently doing now, as I would say a pre-A round. And we backed them when they were just a handful of engineers, entrepreneurs, trying to figure out what they were going to be doing. And we managed to continue supporting them since 2006 when we started backing them until supporting them. I think, Chris, you mentioned that LP and GP, it's like getting married. With founders and entrepreneurs, it's even more because you might last even longer sometimes. And so we supported them in their growth. We supported them also in their internationalization, bringing on board index ventures, and also bringing on board Isomer venture partners from the US to help Criteo, in fact, get this angle for the US markets. And that was the angle for the potential exits. At the end, just before the IPO, on the pre-IPO side, we welcomed SoftBank that injected enough cash to be able to help them into that phase to carry out an IPO on the NASDAQ. This was among one of the first entrepreneurs from Europe to be able to successfully go from the European market to an international and list on the US stock exchange. Returns were incredible. We made 70x on this. I'll be honest, this is not at all what you should be expecting as an investor.
But it does happen.
It does happen. It's a lot of hard work and a lot of luck as well for some of them. So, but it's definitely a proof that even in those earlier days, 2006, 2013 was the exit, you have some incredible entrepreneurs that have made the first step. And from them, and this goes back to what everyone was mentioning, you have this sort of PayPal mafia from the US now becoming the Criteo mafia, the Spotify mafia, the Revolut mafia. And so out of Criteo, you had roughly close to 40 people that came out, started launching the businesses. Some failed, some succeeded. And I think this is something we'll continue to see. More and more of the ventures have learned about this, and now we're being able to follow and support these entrepreneurs across, in fact, their journey. And this is one of the key points which brings a lot of hope for me for Europe.
Criteo is one of the cornerstones of European ventures, so thank you for your involvement. Jerry, I think some in the audience might be thinking you're investing in these new, let's think about semiconductors, but it could be others, nuclear technologies. How do you assess the risk, which is significant, versus the reward when you make an investment?
Yeah, I think one of the things that distinguish deep tech from, let's say, SaaS or fintech is that if you look at the SaaS or fintech in the previous decade, they always talk about the biggest risk being the product market fit. The thing with deep tech is usually when researchers started to work on a specific topic, there's already a big problem to address. For example, it could be Parkinson's disease, it could be energy problem, you put something. So the product market fit is more that can you get technology to work at a cost that would make money. So the PMF is usually less of a problem in deep tech, which is...
Can you just remind people what PMF means?
Product market fit, or it
What
could
does
be
that
something
mean?
else. Yeah. So when we look at deep tech companies, actually the way we manage risk was more, we have to keep reminding ourselves that the technologies are all very impressive. Trust me, I mean, you look at 1,000 companies per year, probably 100 of them are very, very impressive technologies. But we have to keep reminding ourselves it's the entrepreneurs that build businesses, not the technology themselves. If I want to invest in technology, I'll just license technology and build a company myself. But so be able to separate ourselves from being amazed by how smart the scientists are and just focusing on, okay, beyond that, can they raise money? Can they build companies? Can they sell products? Can they recruit people? And that's actually how we de-risk this. It's very, very soft, but as an early stage investor, that's our only kind of reliable way of like separating the people. Yeah.
Pierre, we talked about Europe being multiple mini Silicon Valleys. How do you think about Europe when you're investing? Do you think about Germany for a certain technology or UK for a certain technology, or is it not like that?
It's very much like that. It's really multipolar. And it goes deeper. There are countries that will excel at industries over others, but even within that countries, you will have to know the specific labs, the specific subclusters, and it's very often, like in the UK, it's going to be outside of London. For instance, if you're looking at photonics, as an example, the home of photonics is probably Southampton. You want semiconductors, spend time in Bristol, etc. Obviously, you'll have places like Cambridge, Oxford, some of the universities in London that will have broad coverage. But if you really want a very specific subsectors, you need to know on which door to knock on. And this is essentially a unique skill set that investors like us who know our markets deep down and are very specialized bring to the companies when it comes to bringing the right co-investors as well, but also to LPs to find these companies in the first place, and then, as you mentioned earlier, give them the opportunity later on to co-invest as as they grow. But knowing where to look for is really the art. Yeah.
Andrew, in your presentation, you actually mentioned a couple of companies that you're thinking. So I'm just going to slightly change my questions. Hope that's okay. Can you talk about a company that you're really excited about now in your portfolio that's evolving?
I would say it's one which we had in our portfolio for some time. We're looking for technologies that unlock an entire value chain, an entire sector. So we're searching for the constraint and a company that will address with technology that constraint. And the constraints can be things such as cost, obviously, but also social acceptance. And they can also be unlocking things such as the capital intensity of the entire value chain. So we invested in a company in Germany a number of years ago that utilizes a liquid organic hydrogen carrier, which enables hydrogen to be stored as a liquid, but not under low temperature, but rather ambient temperature and pressure. It enables the use of existing infrastructure, which reduces the capital intensity of transporting and storing hydrogen. So the technology itself was very exciting. We mentioned the team. The team is extraordinarily capable. A young man who had studied at a very good university, worked for BMW for a number of years, and decided to do more than follow the herd, if you will, and break out and develop around himself an incredible group of other like-minded leadership team. So I'm very excited about that because they've grown the company, they've raised capital in an exciting area, and now we mentioned regulations and the importance of regulations and the support in Europe specifically for this particular sector. they've managed to win cumulatively almost $250 million of non-dilutive funding for the next 3 projects that they'll be executing the technology into. So it's a very exciting origination, it's a very exciting technology team, and now marketplace for them.
Just double downing on this market support in Europe. Grants are really important. Is that something relatively new?
I think the clarity around in this particular sector, so hydrogen, within this broader energy transition sort of marketplace, there's clarity has been brought to that relatively recently. There has been just this year the new industrial clean deal, or new clean deal, industrial clean deal for Europe that has a number of additional very large both support and regulatory enablers across Europe. And that it is literally hundreds of billions of dollars that is part of what I'd say a holistic industrial strategy for Europe. So it not only considers the need for decarbonization, but it is looking to grow jobs, it is looking for security and to enable security, and to ensure the cultural way of life across Europe is maintained.
Pierre, we've been talking about the founders and the team being really important. I remember talking to the founder of Amadeus, Hermann Hauser, about 2012, and he said, what's happening now is we're beginning to see repeat entrepreneurs in a way that there wasn't before. How important have you found in your investing this idea that you're investing in someone that's done it before?
Oh, it's central to many things we do.
Irrespective of the outcome, perhaps?
It's well, you hope it would help, and but what you get with a repeat entrepreneur is essentially someone by definition who's been there, done it, and it's not the first rodeo. They know how to grow companies. They know what not to do. Many of them would have learned a few things, on the way, sometimes the hard way. But more importantly, they really have this unfair advantage of being able to attract the right people very quickly, tap into the right pool of capital, go as fast as possible from a product to a partnership, a commercial partnership. And what we see very often with first-time entrepreneurs, on the other hand, especially if you look at, deep in the labs in universities, is that they can become their worst enemy. The product is never good enough, is never ready enough. There's always something else, another feature to be added. And by the time you think, you're ready for market, the market has moved on. And a serial entrepreneur will be very, very tactical. And, this dose of realism and planning is really what you're after as well. It's the insider knowledge that comes across.
Jerry, when we think about semiconductors and we think about quantum computing and these kind of things, what has Europe really got to offer here relative to anywhere else?
Yeah,
So I need you to market.
Yeah, so I had that semiconductor discussion this entire day. Everyone I met, they want to talk about semiconductor. I think the one thing important to really to focus. I mean, semiconductor is super critical for a lot of the countries, but the capital market doesn't necessarily reward all kinds of semiconductor. You have to be careful. I mean, so my last company was Qualcomm, but if you look at the Qualcomm market cap and the valuation, it's not particularly, they say it's not like 20x during the SaaS days when you're giving random CRM companies with no positive cash flow. So there are companies like Nvidia or like a few companies that really got really high valuation because of AI. I think as an investor, we want to look for truly groundbreaking things in semiconductor. You still need that 10x, 100x kind of potential. There's a next generation lithography that will pave way for another 100 years beyond ASML. That's something that is worth betting on and those kind of things. But if you're talking about having a new kind of like power chip that is 30% more efficient than the current one, forget about that. I mean, you get a shitty valuation. By the time you hit the market, the price has dropped another 50%. not the most ideal part. I mean, it's not. It doesn't mean that it's not a good business. It's just that it's not venture financeable. So that's how we see semiconductor. So Chris, you're an LP. You notice that even though we have this expertise in semiconductor, we actually very, very selective in terms of investment in semiconductor company.
Got it. Solomon, you've been listening to all this. You have the luxury of doing other things as other asset classes as well. Sum it up for us, the opportunity for Europe.
I think there's always a golden rule that people joke around in real estate, which is what's the best investment? It's location, location, location. I think for venture, you can probably say that the three rules are people, people, and people. And Europe definitely has the talents. And I think the market is currently underserved, meaning it's a very attractive entry point. You have excellent talents and some that have the experience, that have successfully managed to exit, that are coming back, that are nourishing the rest of the market. So you have all the elements here to be able to make great companies, great deals, and at the end of the day, attractive returns for investors.
Fantastic. I'd like to ask if anyone's got a question, and while you're thinking about it, I'm going to just ask the panel for a very quick response to the next question, starting with Pierre. Your prediction for what will happen in AI by the end of this year?
There's going to be consolidation. Clearly, there are many, many models out there. Not all of them are going to make it, and more agentic AI probably in a soundbite.
Okay. Andrew?
I'll answer your question from a user's perspective, and I think what I'll see is rather than being influenced and by the product of AI, I'll be led by the product of AI and be a passenger.
Jerry?
I'm going to be contrarian here. I often say if you want to predict AI's future, don't ask the VCs. So I think fundamentally we still have to see end application. So it's all good to pay like $200 per month to replace engineers. But at the end of the day, you need consumers to pick up whatever end application that people are doing. And until we see that happening, there's a very, very high likelihood this is a house of cards, which is not good for the industry, but it's one very probable outcome. Yeah.
Solomon?
And I think that AI will disrupt itself in some ways, where everyone's going to be trying to apply, and the key is going to be execution. And this is what's going to be interesting. The great companies that are going to be founded, in fact, by the right entrepreneurs that will know how to constantly adapt, because AI is going to be very, very fast adaptation, and this is going to be even faster than what we've seen before.
Does anybody have a question for this amazing panel? Sir, could you give the gentleman a microphone, please? They're coming.
Thank you. Assalamu alaikum. We have witnessed that in the US especially, that we've had high school dropouts, university dropouts, garage, startups. That was pretty much, I think, the first generation of startups that's built the unicorns that we see in the market. And then we have the second generation, if not the third and fourth. Do you think, because that you emphasize so much about people of higher education, such density of higher education in Europe, that you find it as a strong impetus for potential? Do you think AI could open doors for another wave of high school and college dropouts that really doesn't require innovation from such high, educated people, rather just to have them employed or even sometimes employed less? Do you think there is going to be an institutional change of the inflow of talent that builds these new companies?
Anybody like to answer that?
Yeah, I think we already saw this happen before AI, right? So the whole lean startup concept is that you can start a company with minimum, let's say, computer science or technology background. And the result is that, yes, you have a huge, maybe 10x, 100x more entrepreneurs starting companies, but it's also a lot more fierce competition. We saw in that game, a lot of game became like capital game, right? So if you look at the the ride hailing between Uber and Lyft and all those companies, they basically who raise the most money, who will be able to kill the competitors. So it's going to be a different game. And so AI will be unleashing another wave of 10x, 100x more entrepreneurs starting company for sure. How would the game will play out? Already we see the huge capital requirement of people developing foundational model and all that. How does that propagate to lean AI entrepreneurs that use wrapper to build companies, and how can that build any defensibility? I think that's the most interesting question. Every VC that invests in these sectors have their own secret sauce. But I think just to answer, it's a confirm answer to your answer, but it's going to be a different game compared to deep tech investment. Yeah.
Maybe just to add one point is definitely, I mean, even before AI, you had some school dropouts, maybe Garage in Europe that were creating great companies. One of them that we backed is called Zenly. The founder, I mean, just like learned up how to code on his free time. He was someone who liked biking and motorbiking, and he created an incredible company that was sold to Snapchat. So you already had them, you'll continue to have them, and I think AI is just offering another tool for more people to jump in as well.
Anybody want to say anything else? We're out of time, but anybody want to say anything else? Well, I'll leave it with this thoughtful point. We did a study some years ago of our most successful entrepreneurs in our VCs and the correlation that came from troubled family beginnings. The correlation was extremely high, which is an interesting thought. Ladies and gentlemen, thank you very much.
Thank you, our panelists, for the incredible sharp insights.